you curious about the major tax law changes that President Biden has been proposing and what they could mean for you? Well, keep watching. I'm Amanda Hayes, president of AKH Financial Corp, and this is The Money Mindset. There is so much information out there to digest, and our hope is to simplify it down to some of the key items that we feel our clients would like to be aware of. Our goal is to help you make that path toward your financial goals tax efficient. So we need to be aware of potential tax law changes. Before I begin, I find it is always important to review that there are 5 key areas of financial planning. They are preservation planning, retirement planning, tax planning, estate planning, and investment planning. Even though today's presentation is focused on tax planning, as a comprehensive wealth management firm, we try to always consider the impact of any recommendation we make on not just one, but all 5 of these areas for our clients. During his campaign, the now 46th President of the United States, Joe Biden, released a proposed tax plan with a key focus on higher taxes for the wealthy and for corporations. While these proposals are not yet law, the president and members of Congress keep talking about them. So with all this money the government keeps printing, taxes may very well be a way they intend to pay for it all. So it could be helpful to be aware of them. I'm going to go through the top 7 potential tax changes. The first proposed tax increase is in regard to corporate tax rates. Under the Tax Cuts and Jobs Act of 2017, the peak marginal corporate tax rate was reduced from 35% to 21%. Dozens of large corporations ended up moving their headquarters back to the United States because of those tax decreases. Under the Biden tax plan, the corporate tax rate would be increased from 21% to 28%. Number 2 is an increase to the marginal tax rate for top earners, which are defined as individuals that are making over $400,000. The Tax Cuts and Jobs Act had just lowered the top marginal bracket from 39.6% to 37% in 2018. The Biden administration is wanting to raise that top marginal income tax bracket from 37% to 39.6%. Here's a visual of what married filing jointly tax brackets might look like if that happens. You can see the tax proposals are pretty targeted toward incomes over $400,000. Now there are several strategies that could help mitigate this, so be sure to call our office or a qualified tax accountant to see what options are available to you. Number 3 is lifting the capital gains and dividend tax rates on filers with incomes above $1 million. They would have to pay ordinary tax rates on their dividends and capital gains no matter how long they have held the asset. This would imply that large earners or large gains could see those rates that are usually tax advantaged rise to 39.6%. Here's a visual of what capital gains tax rates could look like if this happens. Instead of 3 rates, there would be 4. Number 4 is capping itemized deductions of 28% for those with earnings of more than $400,000. This means for each dollar of itemized tax deductions, including charitable contributions, a taxpayer or a couple filing jointly would only receive a maximum benefit of 28%. This limit would hold true even if a filer is paying a higher marginal tax rate. For example, if this were enacted and you have $40,000 of deductions, then even in the highest brackets, you'd only save 28%, or in this example, $11,200. Number 5 is phasing out small business income deductions for taxable incomes over $400,000. This is a complicated piece of legislation, and his proposal did not share details, but we still need to acknowledge it. Number 6, another proposed tax implication is the elimination of the step-up in basis rule. The Biden tax plan wants to put an end to the step-up in basis. Now, this law applies to estate transfers. When someone inherits investment assets, the IRS resets the asset's original cost basis to its value at the date of the inheritance. The heir then pays capital gains taxes on that basis. For example, if an individual invested in a position of $300,000 of investable market securities is worth $500,000 at the time of their death, the heir would pay capital gains on anything over $500,000 if the position were ever sold. This is because they received a step up in basis. If Biden's tax proposal were to become law, heirs would not inherit a step up in basis cost if they liquidated the position. So they would realize a $200,000 capital gain selling that position because they would take that original $300,000 basis. Think of a stock you might inherit that maybe your parents bought 30 years ago. So those gains could be pretty serious. Number 7. One of Biden's most talked about tax plans is significantly reducing the estate tax exemptions from the current $11.7 million per individual back down to $3.5 million immediately. This is a big one. That means estates over that value would be subject to estate tax, and estate taxes can be nearly 40% of your gross estate. I tell clients constantly that when you die, you can leave money to 3 places: your family and loved ones, a charity, or the government. If you watched my free webinar on why estate planning matters, I give several examples of how to protect your assets and how to leave the maximum legacy to your loved ones, charities, and not the government. Now, of course, I'm not a CPA for disclosure purposes. I don't prepare taxes. However, I like to get very creative with strategies for my clients on being tax efficient. I also work with some extremely gifted tax accountants and tax attorneys because it's not always about what you earn, but what you keep. And there is a difference between getting wealthy and staying wealthy. So the first key area of planning we look at with clients is their income taxes. A lot of investors have had some serious gains, not only in the market, but in their investment properties and their real estate. At AKH Financial Corp, we try to protect those gains and involve all 5 key areas of financial planning. We want to help you realize your financial goals and dreams. We believe that taking a proactive approach is so much better than a reactive approach, especially regarding income tax strategies. What can you expect from AKH Financial Corp? You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. If you like this video, then please share it with a friend. We would be so honored if you could share some of the names of them with us so that we can add them to our mailing list so that they can also benefit from this information. Check out our website at www.amanda-hayes.com for a list of our gold medal services and other great financial insights. Or tune in weekly for Money Talk with myself and legendary talk show host of Florida, Mark Bernier. Every Thursday, right after the market closes at 4:05 p.m. on 11:50 a.m. WNDB. Thank you again so much for your time today, and remember, a proactive approach can many times lead to a much better result than a reactive one.